Good morning, traders. My name's Des here at Grok Trade. It's the morning edition on Friday, January 14th, 2011. And right now we have the report CPI coming out, retail sales coming out, and we're seeing a drop in the markets. We're looking at a 1-minute chart right here, and you can see this is a 1-minute chart. Up until the reports at 8:30, things were looking more and more bullish, and then we're dropping. We're right now at a support level at 127.90 on the S&P. And this news just now breaking, so what I'm doing is looking for that news as I do this video with you. But the markets have really come down quite a bit. So December CPI comes in at a hot 0.5%, but core is right in line. Very interesting. Okay. So we have the CPI month over month from December being 0.5%, and the prior was 0.1%, and we were looking for a 0.4%. So we're looking for 0.4%. We got 0.5%, and we were at 0.1%. We had the PPI come out. There it is. Look at this nice bounce we're getting there. We had the nice or a PPI that came out yesterday give us a hint that inflation was in fact creeping up, but not anything to, I mean, if anything, we're creeping away from the abyss of the deflationary nightmare that we could going into, but I don't see that or anything telling us that that's the direction that we're heading. And I'm multitasking as I'm doing this video, as you can probably tell with how I'm doing this. And looking here, we did see Brazil's retail sales rise even as inflation fears linger. Retail sales. All right, retail sales December is 0.6% versus 0.8%. So there's the news. And what we have here is choppiness to be expected. The markets are going to need to digest this, but we're caught up in the moving averages here. This is what's key. Anytime you're caught up in the moving average, just sit on your hands. Don't make a judgment call off the technicals. What we want to see is something that's breaking and releasing from the moving averages or dropping below the moving averages. And at those times, we can start playing what it is that we're seeing. But especially after major news events, you're going to get some choppiness. In that choppiness, it's easy to give back money. Don't do that. So wait for a trend to establish itself and get ready to go. First thing will happen this morning from the opening bell. You might want to sit in your hands for the first 30 minutes or so, unless you're a very savvy trader. You have techniques and strategies in place, and you're going to follow your methodology, how you're going to trade that. Then you could trade in the choppiness. But other than that, it's always best to sit on your hands for the first hour. We call it amateur hour for good reason. Or sit on your hands for the first 45 minutes, or at least the first half hour. So what we have here is we have the S&P down 0.43%, 0.4% on the Dow, NASDAQ down not as much, 0.16%. The levels that we're looking at today to the upside, 128, 128, 10 or 11 is a bigger one, 128.16, 128.30 or 31, 128 and a half, 128.7. 0.72, 128.81, 129, and on support levels, big one 127.90 to 91, and we could be adding another one here. I'm going to go to a 15-minute chart. Here's the 15-minute chart, and then 127.60, 127.47, which would be a bigger one, and then 127.32 and 127.18. That should keep us busy today. But as far as the 15-minute chart is concerned, we're hovering below the moving averages. That's no good. We need to get some movement back inside and above. If you're a bull, this is great news. If you're a bear looking for a drop, we have a bullish divergence on the MACD, so there is a chance that that will want to start heading northbound. And so here's the big picture on the 60-minute. We got this rounded top type look here. So if the market's going to get bullish, we need to get up over this 128.81. 128. We need to get over 128.80. Is what we need to do. So 1288 on the S&P or 1280 on the S&P would be a good area to get up above. And if we can't do that, if we start slipping here, even on good news on JP Morgan and Intel, so if we can't go up, that'd be a telltale sign to me that the markets are very weak and that we are overextended and we're wanting a pullback. Take care, safe trading today, and check us out there in the chat room.